Have you ever wondered how to start investing in the stock market? Well, you're not alone. The world of stock market investing is a vast landscape filled with endless possibilities for wealth creation. But before we dive into the deep end, let's start by understanding what stocks are and how they work. In its simplest form, a stock represents a tiny piece of ownership in a company. When you buy a stock, you essentially become a part owner of that company, no matter how small your share might be. Companies issue stocks to raise money for a variety of reasons, such as expanding their business, paying off debts, or launching new products. Now, the beautiful thing about investing in stocks is that as the company grows and prospers, so does the value of your stock. Think of it as planting a seed and watching it grow into a robust tree over time. The key here is time. Stock market investing isn't a get-rich-quick scheme. It's about building wealth gradually and consistently over the long term. But here's the catch. Just as a company can grow and prosper, it can also face setbacks and even fail. When that happens, the value of your stock can decrease, sometimes significantly. That's where the risk factor in stock market investing comes in. However, with careful planning and strategy, these risks can be managed. So, how do you start? Well, the first step is to educate yourself, understand the market dynamics, learn about different types of stocks, and familiarize yourself with key investment terms. Knowledge is power, especially in the world of investing. The next step is to set clear financial goals. Are you investing for retirement, to buy a house, or to fund your child's education? Knowing your goals will help guide your investment decisions. Lastly, be prepared to stay in it for the long haul. Remember, stock market investing is a marathon, not a sprint. It requires patience, discipline, and a steady hand to navigate the market's ups and downs. Investing in the stock market might seem complex, but with the right knowledge and strategy, you can navigate it successfully. Stay tuned as we delve deeper into the world of stock market investing in the upcoming scenes. Before making your first investment, thorough research is key. This is a fundamental principle you'll want to adopt as you embark on your investment journey. But why is research so important, you might ask? Well, think of investing like navigating a ship in the vast ocean. The research you do is your compass, guiding you through the turbulent waves of the market. Without it, you'd be sailing blind, and that's a risk you don't want to take. Now, when we talk about research, it's not just about checking a company's stock price. It's about delving deeper, understanding the company's business model, its place within the industry, and the potential growth of that industry. You want to have a good grasp of the company's financial health, its profits, debts, and cash flows. But where can one find all this information? Company reports are a great place to start. These reports, also known as annual or quarterly reports, are published by the company itself and provide a comprehensive view of its financial performance. They can be a bit technical, but don't worry. With time, you'll get the hang of it. Another valuable resource is financial news. Newspapers, online articles, and even podcasts can give you insights into market trends and the economic climate. They can help you understand how external factors, like political events or technological advancements, could impact your investments. Investment analysis websites are also a goldmine of information. They provide detailed analyses of different stocks, including their strengths, weaknesses, opportunities, and threats. They also offer comparisons between different stocks, which can be useful when you're deciding where to put your money. But remember, research is not a one-time thing. The market is always changing, and so should your knowledge. Regularly updating your research is just as important as doing it in the first place. So, as you step into the world of investing, keep this in mind. Knowledge is power. The more you understand about the market, the better your investment decisions will be. Remember, informed investing decisions are always better than blind guesses. Never put all your eggs in one basket. The same applies to investing. This age-old saying is the heart of what we call diversification in the world of investments. But what exactly is diversification? Simply put, diversification is the strategy of spreading your investments across various assets to reduce exposure to any one particular asset. It's like creating a safety net for your investments. Consider this. You have 100 apples and you need to store them. Would you put all of them in a single basket? Probably not, because if that basket falls, you lose all your apples. The same logic applies to your investments. If you put all your money into a single stock and it tanks, your entire investment goes down with it. This is where diversification comes into play. Instead of putting all your money into one stock, you split it across different sectors, geographic regions, and types of stocks. So, if one sector, region, or type of stock doesn't perform well, others might still do well. This helps to balance out the losses and gains and reduces the overall risk. Imagine investing in tech stocks, healthcare stocks, and consumer goods all at the same time. If the tech industry faces a downturn, your tech stocks might suffer. But your healthcare and consumer goods stocks might still perform well, cushioning the blow of the tech downturn on your overall portfolio. Similarly, investing in different geographic regions can help safeguard your portfolio against localized economic downturns. If you have investments in Asia, Europe, and America, a slump in one region might be offset by growth in another. Diversification isn't just about reducing risk, though. It can also provide opportunities for growth. Different sectors, regions, and types of stocks have their own growth potentials. By diversifying, you give yourself a chance to benefit from these different growth opportunities. But remember, while diversification can help reduce risk, it doesn't eliminate it. Also, it's not a one-size-fits-all strategy. Your diversification strategy should align with your risk tolerance, investment goals, and time horizon. Diversification can help protect your investments from market volatility. So let's not put all our eggs in one basket. Let's diversify. To buy and sell stocks, you'll need a broker. Just as you'd hire a realtor to navigate the complex world of real estate, a broker guides you through the labyrinth of the stock market. Now, the big question is, how do you choose a broker? There are several factors to consider. First, let's talk about fees. Brokers are not charity workers. They charge for their services. Some charge per trade, others have a flat fee, while some offer commission-free trades. It's essential to understand these costs up front so you know what you're diving into. Next, consider customer service. The stock market doesn't sleep, and you might need assistance at odd hours. A broker who offers round-the-clock support could be your knight in shining armor when you're stuck in a trade at 2 in the morning. The user-friendliness of the platform is another critical factor. Some platforms have a steep learning curve. You don't want to be struggling with understanding how to place a trade while the stock market is in full swing. A user-friendly platform with a clean, intuitive interface can make your trading experience smooth and enjoyable. Now, let's talk about the process of setting up a brokerage account. It's typically straightforward. You'll need to provide some personal information like your name, address, and social security number. You'll also need to answer a few questions about your investment goals and risk tolerance. Once your account is set up, you can start trading. But remember, it's always a good idea to familiarize yourself with the platform before you dive into live trading. Choosing a broker is not a decision to be taken lightly. It's like picking a partner for a long journey, and you want to make sure you pick someone who's reliable, understands your needs, and can guide you towards your goals. Choosing the right broker is a crucial step in your stock market journey. You've done your research, diversified your portfolio, and chosen a broker. Now, it's time to make your first investment. So, how do you go about it? You'll need to buy stocks through your broker, either online or over the phone. It's as simple as entering the name of the stock you're interested in and the number of shares you want to buy. But before you jump in, it's important to keep a few things in mind. Start with an amount you're comfortable with. It's common for beginners to start small, investing an amount they can afford to lose. This takes the pressure off and allows you to learn the ropes without severe financial risk. Remember, investing isn't about making a quick buck. It's a long-term game requiring patience and steady nerves. The market will fluctuate, But don't let that deter you. Making your first investment can be exhilarating, but remember, investing is a marathon, not a sprint. So, we've covered a lot of ground today. We began by understanding the basics of stock market investing, highlighting the importance of knowledge and education. We then moved on to the significance of conducting thorough research before making any decisions, emphasizing that informed decisions are the backbone of successful investing. Next, we delved into the diversification strategy, explaining how it can help spread risk and increase potential returns. We also discussed the vital role of a broker in facilitating your investments and how choosing the right one can significantly impact your investing journey. Finally, we walked you through making your first investment, underscoring the thrill and potential rewards of this significant step. This journey of investing is not a sprint, but a marathon. With these steps, you're well on your way to becoming a savvy stock market investor. Remember, patience and informed decisions are your best allies on this journey.